We have Carnivore's Dutch Masters and Bullseye Options Alan Nuckman. And as we mentioned, standing by to tackle Disney, Needham's senior internet and media analyst, Laura Martin. Dutch, I begin with you. The regional banking ETFs are hitting 1 week lows, the KRE, KBW, et cetera. That speaks volumes because 1 week ago, PacWest and Western Alliance were getting killed on those reports. They were exploring, strategic options to stay above water. Dutch, what has to happen before this is over and stops affecting the broader market?
Well, I think that, my message is that this too shall pass. We do like Zions Bank quite a bit because they are a conservatively run outfit. They do a lot of SBA loans, so they're not taking a lot of risk with their balance sheet. They're not making sort of Silicon Valley type, loans. They have 11 states that they're in the Western United States. I think for this to pass, we do need to have somebody stabilize things, and the FDIC approval proposal is out there, and it's something that I know that you've been discussing. And I'm a free market guy, so I believe that making stupid decisions should have some consequences. However, I also don't think that a company that's sitting with $1 billion or $2 billion or $3 billion in cash at a bank should be punished for that stupidity as well. That's certainly not theirs.
Well, so you see that as an opportunity. I want to bring Alan Nuckman in here. Alan, you have been on those trading floors at times like this. Talk to us right now about what you would be doing at the moment when it comes to whether it's buying the S&P, selling the S&P. You tell me.
Well, first, to get to the banks, all right, few bad banks, they broke. It's capitalism. Unfortunately, they didn't understand how to hedge, and they didn't understand their customer base. Mm-hmm. So it's a velocity of money story. So I don't think it's a systemic issue at all. I think there's huge opportunities. You talked about the regional bank index. It's 147 banks. I'm an options trader. I would buy options 3 to 6 months out and be in position because the PE is 7. They've dropped 40% compared to the XLF, which has only dropped 15%. So,
which is the big financial.
So it's a risk-reward play. But in the big picture, I think it's all about the NASDAQ. You led with Google. Google's positive. Google's breaking out. Now, Google's starting to play ball just like Meta, just like Apple. They had huge recoveries. Nobody wanted to buy them. And now they're looking good. But you can see the NASDAQ, the NDX is actually making new 8-month highs continually almost every day. Tech has turned, and I think that's a very healthy sign that we could see the S&P break out of the range that we're currently in. There's a lot of price positives. 2023 has been nothing but positive, except for the dollar down, interest rates down, inflation down,
and the regional banks
down.
Are you nuts?
Well, the regional banks, unfortunately, nobody.
And the S&P is flat.
Well, the S&P has bounced 15% off the October lows, but the regional banks, nobody's actually lost money on their deposits. It's an unfortunate situation for the shareholders that we've seen this, but the situation is this: they were poorly run, and like the Dutch said, they should not be rewarded for not hedging. It's not hard. That's what they got trading floors for, is to hedge their risk, and they chose not to. They suffer the consequences.
Dutch tech. Suddenly, when you throw that term AI or artificial intelligence around, you get a pop like what Google is doing. That's all very nice. I've seen that movie before where people threw in a crypto prospect, or remember, we're adding .com to the name of our company.
Marijuana stocks.
Yeah, or exactly, or fintech.
No, Alan's dead right. Tech has bottomed. We love tech right here. We think they've done the hard work. They've been blasted. They've laid off the people. We think that we could be seeing a slingshot in tech. And since tech is 25% of the S&P 500, it's going to drag that up too.
How do you play tech, Dutch?
We are long TECL and TQQQ right now.
TQQQ. So I'm imagining that's one of those Direxion type of things where you get the triple or double the move every time if you're long.
Yeah, well, carnivore never goes halfway, right?
I know. That's why you're a meat eater, right? Alan, we got the PPI.
Right.
Okay. This is inflation at the manufacturing level. It was very tame. It was either a match or slower than expected. That is all good news, is it not?
And yes, and I'm not a thinker. I'm a trader. I trade what I see, okay? And what do you see? You see the market's telling us that we're done with the rate hike cycle, so we can put that behind us. And the best part of this, it's not what the market did necessarily, it's what it didn't do. We had rates go from 0 to 5%, and the market is still within striking distance of the all-time highs and a recovery. And every time in history that we've sold off, we've filled the gaps up above, and there's one up in the S&P at 42.18. So there's a lot of positives.
Retail names are all reporting next week.
That's the end of earnings season. Earnings earnings season's come out better than we expected, and we've actually seen revenue growth. It's called pricing power. People have wages and inflation are equal now, so nobody feels it and nobody likes it, but that's very much a
What are you
positive.
picking?
Walmart has got earnings come out next week. They have recovered all of their losses from that big dramatic sell-off when we were expecting a recession, and they're set up for a V recovery for a technical target at 200, which is about another 30% higher. You've got earnings coming out. They're expecting about a 4% earnings move, but they're leading the way. They are blazing the way as far as a barometer. That's very positive.
Are you doubling down, Dutch, on retail? Yes or no? We got to run.
Yeah.
Options. Use options, Dutch, instead of those 3 times ETFs. That's just me.
I know. I love Alan, man. He's great.
Yeah, well, you both are. And thank you so much. It's great to have you. Now let's get